But we are going to go ahead and get started. So, as you guys know, coming into every single trading week, we look at the economic calendar. So Monday, we have 8:30 a.m. two red news folders. So tomorrow will be pretty high probability to look for a setup. Tuesday, we have no news. Wednesday, we have FOMC. So due to FOMC, Tuesday might be a little bit more difficult to navigate and it might be a little bit choppier. But Wednesday will be the most volatile day of the week. So there will be a clear move on this day. That doesn't mean trade ahead of it, but there will be a clear move and that will likely offer clarity for Thursday. Thursday we have 8:30 a.m. unemployment claims, and then Friday we have no news. So the best days to trade of the week are going to be Monday and Thursday. And as far as high or low of the week, we could probably expect Wednesday or Thursday to form the high or low of the week. And yes, for weekly halving theory, this is a little bit more difficult because FOMC is fixed to something else, which I haven't really talked about. But Monday and Tuesday are likely to form the high or low of the week, and then this half is likely to form the other high or low of the week. But due to FOMC, Wednesday has a very high possibility of forming the high or low of the week within and of itself. But we will see. So looking at the chart, coming into every single week, what I do is start off with the weekly time frame. You always want to gauge where that weekly candle is going to draw towards. And you can use the previous weekly's candle, buy side and sell side liquidity, as a good navigator for intermediate targets whenever the week opens up and whenever there's not too much information being provided. So due to the fact last week, towards the end of last week, what we formed, what we did, if you watch the price review, then you know. I would like to prefer to see price to want to draw towards the supply side liquidity on all of the assets, but which one is most likely to actually reach the buy side liquidity? Just looking at the chart by itself. Exactly. NQ. So gauging strength and weakness. So now we're getting a little bit more deeper. But comparing this candlestick's wick to the close of this candle, as you can see, if you look at it on all of the assets, the NASDAQ was the one that closed closest to its previous week's wick, while the S&P is kind of the one in the middle, and the Dow closed the most far away. So with that information, this is how you can spot SMT fill a little bit better, knowing which asset is stronger or weaker on the lower time frame for moves in specific directions. And another indicator is if we drop down from the weekly time frame to the 4-hour time frame, if we take the previous week's high and the previous week's low and have our equilibrium being an advanced premium and discount sequence, we can see that there is a minor buy side liquidity resting within premium. So although I would like to see buy side liquidity get reached in specific conditions, and this is what I was referring to earlier, you don't necessarily need to be correct. You just need to be semi-correct about the direction, and you can look for intermediate targets within the range. So coming into tomorrow, the best case scenario would be for price to propel higher, going towards this high right here. and preferably the NASDAQ being the one that delivers it first because it is the strongest towards that direction. If we drop it onto the 1 hour time frame, as you guys know, everything within here, I want to see if we can treat this as a breaker. And we could see a daily cycle or 90-minute cycle sequential SMT somewhere within here that propels price higher, going for this high, as well as all these highs right here and this high. So now we can do some Q&A. Do we determine the narrative only with SMT or with PSPs and TPDs too? You can use both, but higher time frame sequential SMT is the easiest. Do you want to see Wednesday's high get drawn to as a target or also make a non-sequential SMT? For now, get drawn to as a target, and then if we're able to trade above here, then I want to see if we can form a lower time frame sequential SMT or TPD. If that does form, then I wouldn't be surprised if we come back and trade lower into these lows. But for right now, just continuing the order flow that we have since Friday. See if we can propel price higher, go for these highs, and then depending on how, if we trade aggressively above these highs, that'll tell me, okay, NASDAQ is likely going to reach for this weekly fair value gap. So it all just depends on once we, or if we're able to trade above here. So for London session, you want to see price trade in that breaker and how higher to the minor buy side liquidity, and then form a sequential SMT at New York session tomorrow, right? Something along those lines. How do we not get caught trying to look for sequential SMTs and TPDs in the wrong side of the market? Just look at higher time frame order flow. So remember this SMT right here, even though it was non-sequential, what do we have confirming it? The 6 hour TPD. And if we look at the 1 hour, there's that 1 hour market maker model within here. And there's nothing up here so far that tells me it's likely to reverse. Now in low probability conditions like this, since it still is pretty choppy and it could just stay within a range, but using the concepts that we have, we would want to see just like what was taught to you earlier on. An object in motion stays in motion until an equal or opposite force acts upon it. So we could likely just stay within this motion until something forms that says otherwise. So how to not get caught in the wrong side of the market is just understanding the higher time frame order flow. Everything that's happened in the past, you're using that information to gauge whether or not TPDs and SMTs will serve as a retracement, which best case scenario right here, this would be a retracement for a continuation higher, or if it's for an actual continuation. Do you always trade after 8:30 or do you sometimes take trades before 8:30 on indices? Majority always after 8:30. There are certain news events that seem not volatile on the outside, but they really are. And sometimes there will be a setup beforehand to where you're able to catch it, but those rarely come about. How long can we use a non-sequential SMT and 6 hour TPD for the bullish narrative? There is original consolidation reaccumulation in the run up higher. Are we just waiting for an SMT TPD for a potential run lower to clear those lows? Yes. Since this is the original consolidation, I would want to see if price can run up here. And then depending on how we trade within here, that will give me all the information needed to know if we'll either won. And in tricky market conditions, this is how you need to think. You need to have a target. Once that target is hit, are we going to either, depending on what we form and how aggressively and where the day closes, if we're able to clear this high, if we trade all the way above here and close on that daily candle on like Monday, Tuesday, somewhere around there, then I wouldn't be surprised if we come and try to aim for these highs. But on the contrary, if we trade above these highs and then, form like a weekly cycle bearish sequential SMT and Tuesday closes down here, that wouldn't be surprised if we come for these lows. So it's just a matter of if then. Since the week is still very brand new, we just need more information to really gauge the proper weekly range. Do you use other cracks and correlations to determine narratives, such as crack and correlation between premium and discount, or the crack and correlation between true opens? Every single candle is a crack and correlation. It's just filtering is the hard part. If we have Q1 and Q2 daily cycle sequential SMT, that could be the move up, correct? Yes. If we see a weekly cycle SMT with the TPD forming tomorrow morning before taking Wednesday's high, last week, is that stronger or weaker to the bullish non-sequential and 6-hour TPD? I would say that's more so equal. But on the NASDAQ, if we're able to run above this high, just knowing the difference in spread from this high to this high, this isn't much range. So if we're able to clear this high, then I wouldn't be surprised if they'd want to run and clear this high as well. It's unlikely for the markets just to run a high like this whenever there's one directly behind it that's clean. So if it's able to trade above into here, then it's best to think that it's likely to go for this one as well. Because rarely does the market ever just barely tag above a high like this and then just drop. Like, think about the last time you've seen that happen, where there was an extremely clean high to the left, but the market just barely ran above a high and then bam. When should we trade the PM session and when should you avoid it? On days with 10 o'clock news, if that morning session is really choppy, typically the PM session offers something of value. On days where it's only 10 o'clock news. And Friday price lecture homework is the 15-minute TPD for the bearish delivery. I wonder why NQ at 9 a.m. 15-minute TPD took out the high with the lower Kraken correlation and the opening in CSD. The 15-minute TPD played a part, but it wasn't the reason why. If the same candle is the true open of 2 cycles, is the true open high or low probability? It would be a higher probability. reversion levels, you have pointed out that reversion levels usually consist of the entire wick of that last up or down closed candle inside the TPD candle 2. When using this level as an entry, where is the entry in validation? The opposite high or low of the candle or the 50% of the candle range can make a big difference on the risk to reward ratio. In theory, you can use that mean threshold. Put your stop if you're bullish a little bit below. If you're bearish, a little bit above the mean threshold if you choose the correct asset. But if you want to be a little bit safer, then you can use the highest point or lowest point. Because just think in mind whenever you have reversion levels, if you choose the wrong asset, the asset that is the weakest is likely to run the higher low one more time, creating that SMT, while the stronger asset actually tags into that reversion level. So if you're able to correctly and clearly identify the correct asset to trade, then you could put your stop at the mean threshold for a higher risk to reward. In the lecture, you said a 6-hour TPD into a 1-hour reversion level, but doesn't the 6-hour TPD and 90-minute reversion level work also? It's something we haven't talked about, but it is something you can look into. But a little cookie that I forgot to add into the pre-recorded lecture is that 2 a.m. TPD and 12 a.m. 6-hour TPD can be doubled. So if there's a 4-hour TPD within a 6-hour TPD, specifically in Q2 of the daily cycle, you can double that and then look for a 1-hour reversion level. So that's like a quote-unquote kill zone. That makes it really easy to foresee daily cycle sequential SMT and 1-hour reversion levels ahead of time. Since the 4-hour time frame uses the 1-hour reversion level and the 6-hour time frame uses a 1-hour reversion level, both of them lead to the 1-hour time frame. And if they form, the 6-hour 12 o'clock candle forms a TPD, like it did right here, then that 1-hour reversion level can be used. But if there's a 4-hour TPD, the 1-hour time frame can also be used. Everything will be recorded, so you can go back and listen to it. But that's one of those little gems. We mentioned in weekly halving theory, if bullish, first half is likely to form the low of the week. Using this theory, if Tuesday closes higher than the intermediate high formed by the CPI last Wednesday, can we use the halving theory to solely to say that we are in a bearish environment, so as the first half of the week is near the high, so the second half is likely to go lower? Yes. Or, so this is the best way to look at it. In weekly halving theory, if any of you back tested it, how many of you seen that it's crazy? So this is what is likely to happen. So as we know, the first, either the high or low of the week is likely to form within here, somewhere around here, likely to happen. And then the second high or low of the week, or say for example, the high of the week forms here, and the low of the week should form here. Or the low of the week forms here, the high of the week should form here. So it's either going to be that this forms the low of the week somewhere around here, and then we trade above these highs, and then FOMC delivers higher, and then we see some form of TPD or SMT here, forming the high of the week, and then that's it, right? Or, so the low of the week would be here, high of the week would be here. Or, we trade above these highs and then form some form of cracking correlation and then FOMC delivers lower towards these lows, and then we form a TPD or an SMT that causes price to return within the range, forming the low of the week. So this is how you properly look at that. So hopefully that makes sense. When we have SMT between two quarters, we don't want SMT in the opposite direction in the next quarter. It's always like that, or are there exceptions? There is an exception, and it's has to do with what we've been talking about in the beginning, narrative. If there's a TPD on the lower time frame confirming that, but there isn't a TPD on the previous SMT that actually kicked off the run, and on that new SMT it's confirmed by TPD, and that new SMT is in tune with the narrative, then it's likely to hold. And then use that previous SMT as a low resistance liquidity. How likely is non-sequential SMT to form the bottom of this extended downtrend? Typically, odd or really fast drops in the market, typically there's something that forms that doesn't look like it's supposed to hold. And I don't want to try to, call the bottom of the market or anything. It's not what we're trying to do. But typically things that look odd form the bottom, and then later on something within the range is what creates the true reversal, and then that kicks it off for a reversal. But we'll just have to wait and see. Right now it's completely an if-then scenario. Anything for Forex? Forex is likely to just stay in this sort of price action. And that's what we've been wanting to see. Since we've been wanting to see the index futures kind of play catch up, the Forex chart is likely to just be a little bit more consolidative, as it's been doing. Are we integrating the bonds market now, or should we wait? Bonds will come a little bit later on. But for right now, we can just wait. Because keep in mind, the more you add into the equation, because there are probably some QT traders that aren't within our group that have been trying to use the Forex triad for intermarket SMT, while the Forex triad was continuously rising after it decoupled, and the index futures was just dropping and dropping and dropping and dropping. And there have probably been people that aren't within our inner circle that have been using intermarket SMT and then getting wrecked, and then getting wrecked, and then getting wrecked, and then getting wrecked, and then they're going to say QT doesn't work. So the more you add into an equation, the less probable it becomes. So that's why we mainly just stick between the triad. When using the 6-hour TPD, we only use the true week open to validate. use the true week open as well as the true day. And the true month. In the 6-hour TPD formed in London session on Friday, the CSE occurred within the first half of the TPD in the 1 hour time frame, and the second half looks like a CSE for the downside. In such situation, how do you determine the right reversion level? So let's take a look at this. Look, it's already on there. I don't even need to plot it. So what would this be characterized right here? What would that be whenever price closes above this within the second half of that TPD? Exactly, it'd be the change in the state of delivery. So seeing this, we would ignore this. And we would mainly focus on this. And also, keeping in mind this. So that's how you determine the right reversion level. Understanding narrative. What was narrative established by? This non-sequential SMT and that 6-hour TPD. And then what formed in the second half of that continuation TPD? The change in the state of delivery, creating the reversion level. But we're going to go ahead, we'll answer these two and then we'll wrap it up. Magneto, when a sequential SMT forms and then there is a opposing SSMT forms within the same cycle, when do you expect that to spring back to the first sequential SMT instead of just being an SMT market structure shift? Does this just depend on the narrative and higher time frame cracks and correlations? Yes. Even if there's no SMT, you can still find something to confirm your idea. As you said, the intermarket should be used when we see nothing. And yes, that is correct. Oh, the first one at the bottom. This one's a little bit different, but as you can see, even though it lies on top of the half, think about new quarters, right? Whenever price opens up on a new quarter, you would still view this as a new quote unquote portion of time. So this still is a valid change in the state of delivery, change in the state of delivery happening within the second half. And then this would be candle 3's open, and you already know the rest. There we go. So hopefully you all found this one insightful. I will speak with you all again in Tuesday's price action review. Good luck and good trading.